Good morning, traders. It's Monday, January the 11th. I did a video this morning, and the new Windows 10 has a glitch with the video software, and it doesn't tell me that it stops recording at 2 minutes and 12 seconds, but it does. And realized that I had to do this on my tower computer. I've updated the video software, so I'm going to do this video over again. Now, zooming in on the chart real quick, SP 500 has had a big sell-off the last week and a half. We're getting down to a critical support zone on a short-term basis. We've got a low here, a higher low there, and a higher low there. That's kind of how the market likes to work. And we're kind of trading right along a kind of support trend line along this area. Now, overall, the market's oversold, but the major trend is more or less neutral to down. And with any luck, we'll get some type of bounce over the next week or two that'll bring us back up somewhere into this area, give us a lower high, and it'll give us a great shorting opportunity. Now, with that said, trying to pick a bottom could be a little tough at this time. I think we're going to see a really choppy week, big ranges, big pops, big drops as the market tries to stabilize, because this could only be the halfway mark, and not even the halfway mark. This could be only maybe a third of the downside move, and we could see a much bigger move to the downside. So long story short is, if we zoom way back in time, go way back to the previous bear market over here. We'll just pull up this one right here and zoom in a little bit. This is more or less, we're trading in one of two spots. We are either trading, we've seen the SP 500 kind of put in the top, very similar to before. We've got a potential head and shoulders pattern here, and this you could argue would be a double top also. We've got this kind of support neckline, and where we're at one of two places right now. We are either right somewhere here where we're going to see some volatility and the market might come up for one last gasp, or we are right here trading at this critical level. We're going to see big volatility. We're going to have this initial bear market leg to the downside where the SP 500 actually breaks this critical kind of support zone right across here. We see it just run the second half of the move down, and then we start our first bear market kind of consolidation and rally, which if we look forward in time, eventually we just see the market continue to move down until eventually we see a bottoming formation and we see an initial rally that breaks some significant pivot highs. So this is a pivot high, this is a significant pivot high, and we have an initial move that goes all the way up and more or less breaks that level. And once two significant highs have been broken, then you could argue that we are in a bottoming formation or a new bull market, and any consolidation or pullback into support can potentially be bought. So we are, again, if we just zoom out on this bear market here, we are somewhere right here or right here, in my opinion. And of course, once we get this break, we've already seen the Russell 2000 do, it's already started this break to the downside. And the TSX has already broken down with a double top and is already in a bear market for several months already. So it's really the US large caps that are kind of lagging, and I think they're going to follow suit. The question is, are we going to get a bounce over the next couple weeks here and then see that move, or are we going to consolidate for a week or so and then see that first initial real true technical breakdown in the large cap US markets? Now let's just go and take a quick look at a couple other plays here. Looking at US dollar index. US dollar index zooming out has had a significant rally. It is in a bullish formation at this point. We've seen a strong move up. It's been consolidating in this kind of pennant formation. It's broken out of that, but in the short term, we've had a huge gap to the downside, a big move down, and that strong move puts a negative kind of tone on things. We've got this bearish channel, this bear flag forming, and there's potential we could see the US dollar break down to 25, potentially around the 24-25 area to fill this gap window. We've got a big gap right here. So we could see that gap get filled, and that would, the US dollar would still be bullish in a big consolidation phase. It could continue to move up, but at this point it's got a kind of a very negative tone and pattern at this point. If we do see the US dollar break down below this critical level, this 24.50, and close below it on a weekly basis, then we could see the dollar really evaporate a lot of these gains that we've seen, and we're going to probably see the commodities market start to firm up in a big way. Taking a look at gold and silver, both were trading up this morning. Now they are both trading a little bit lower. Overall, we're seeing nothing more than a pop within a downtrend for gold and silver. And if we kind of look at this price action, you can see this red kind of deep purple or red line, this cycle here. We've been kind of, we had a blue cycle moving up and we saw gold move up, and now we've got the cycle kind of putting downward pressure. We still have more downward side to go. We've got another cycle over here that's been coming down also. So I think we're going to see gold chop around here for a little while. We have two cycles kind of pulling down. But come February, really come right to this cycle over here, come March, we will be seeing this cycle turning up. We'll also see this larger cycle turning up, and that could be the early stages of gold and silver really putting in a bottom. We'll have two strong cycles moving to the upside, and I think we could potentially see the bottom put in, and the equities market will kind of go into free fall mode along with the dollar, and we'll see commodities start to firm up and build a base, if not go into a full-blown bull market. So we're still several months away from those cycles kind of playing out, but again, just looking at the big picture of gold, it's a series of lower highs and lower lows, and all we've had recently is just a little blip, and we've seen many of these in the past, and it might continue to push up a little bit more, but again, still in a very strong bear market. Looking at miners real quick, miners down about 2% today, a very bearish kind of price action still, lower highs, lower lows. This type of price action, very bearish here. We've got a big bear flag kind of playing out here, and it points to potentially lower prices. And we've seen a lot of support levels, or this support line here has been tagged several times. If this level is broken, the longer consolidation is, usually the bigger the drop and to the downside. So we could be in for a big washout still here in gold and silver, and especially in miners to the downside. But we'll see how things unfold, and we may be looking to do a short play on gold and silver because they're still in bear markets and they're all trading up near kind of short-term resistance and showing some weakness. Looking at energies real quick, natural gas down 3% this morning. Just zoom in a bit here. Overall, we've had a pretty significant pop in natural gas. We got to this oversold level, a V-shaped looking bottom, and we've broken two minor significant highs there and there. When you break two highs, you get a nice impulse wave to the upside. And usually any pause or pullback that lasts a week or two can be bought. Now overall, we've had an initial wave up. We've had a tight bull flag. It's starting to move up. This has got potential to go up to around the 290 area, which will bring us right into all these tops as a resistance zone. And of course, we can look at that by throwing on Fibonacci extension also. Take the low, and let me change tools here. Grab the Fibonacci extension, you take the low, you take this high, and you take this pullback that we had right there, and you move it forward. That brings us up to around the 289, 290 area to the upside. And that's where we could see natural gas kind of move up going forward. Now, overall, it's had a huge run. I'm not looking to really get involved. I'd like to see it form a little more of a bull flag here. It's really just kind of started to play to the upside. We'll see if we get a setup. Natural gas is a little tougher to play, especially if we're holding it long term. The ETFs can lose value over time. It's not a very good commodity to try and trade, except for very, very short-term plays. Taking a look at crude oil, down 2.33%, continues to go into free fall mode. In the grand scheme of things, zooming way out in time here, we've broken the 2008, 2009 lows. We've had this big waterfall sell-off. We've had a bounce. We've had another sell-off. And if we look at this price action, this is kind of some bullish price action that's slowly starting to unfold. We had this initial waterfall sell-off where price kind of picked up speed and went sharply to the downside. Then we've had this bounce, and this sell-off here was kind of a slow, steady grind, not so much of a waterfall with big gaps and drops. It's just been slowly unwinding. We've had another bounce, and now we're getting a little bit more volatility, some bounces, and it's flattened out even more. So we're going from steep trend lines to not as steep, and it's getting flatter. These are the early signs that a bottom is slowly starting to form. And I think looking forward 3 months, I think we could see the commodities market, gold and oil, all put in a bottom at some point here and then start to base, if not start a bull market fairly sharply. So we'll see how that unfolds. But again, we have yet to put in a bottom, and I've got a downside target for crude oil around the $27 per barrel. So we still have another $5 to drop in crude oil potentially here. Taking a quick look at the Toronto Stock Exchange, just so we can take a look at the grand kind of scheme of things here. Toronto Stock Exchange, very commodity based. And let me zoom out a little bit more. Here is the Toronto Stock Exchange, and we've had this more or less double top in the TSX. We broke down here on the first technical level, then we had a bounce back up, and now we're going back into free fall mode. There's a lot of multi-year consolidation through here, so it's probably going to start to find some stability. And if the commodities market gets into a bull market or starts to base, we'll probably see the TSX. It could do something very similar to this, where we start to see it kind of flatten out and become very volatile for a while. But the TSX will still be under pressure. It is a stock market. When the stock market is in a bear market, especially the US, it'll continue to put downward pressure on the TSX, and we might see the TSX grind out and be really choppy until the US market bear market is complete, which could be 6, 8, 12, 18 months from now. And once that happens, then we'll see the TSX, I think, take off. And really, we haven't seen a whole lot. From the 2008, 2009 crash, we really just broke even. It made a little bit of a minor new high. But I think this time around in the next bull market, I think we're going to see commodities do really well. And I think we'll see the TSX probably outperform the US stock market in the next major bull market. So everything always has its time. And this last rally in the Toronto Stock Exchange has been plagued with the poor commodity prices. Anyways, that's it for today. Take care.